it does cost money to purchase a house. It does. You have to save money for down payment, money for closing costs. And there's a lot of uncertainty nowadays with how the interest rates are going to be going, how the market is going to act. Everyone is a little afraid if they should wait or purchase now. I have a tool for you that's going to help clarify some questions and help you identify if you're ready to buy now or wait. I have this information from Magic. Magic is one of the mortgage insurance providers, one of the largest mortgage insurance providers in the mortgage industry. And this is for conventional loans only. I am not affiliated with Magic at all. There's many other mortgage insurance companies that I really like. I was searching online and I found this one. It came up quickly. This calculator Magic. This is something you can find online by yourself by typing mgic.com. Usually for people who are waiting to save 20% down payment instead of buying now with 3% down payment, or if they had 5 or 10. But it also can clarify questions for anyone. Let's see. The buy versus now calculator is going to prompt you to do a couple of steps. And then when you start, it's going to ask you some questions. You can tweak the numbers here. This is asking, how much is your month rent? I would say probably someone is paying $2,000 in rent or more. And your monthly savings contributions, let's say you are saving $300 a month for down payment. And if you have your credit, it could be excellent, good, okay. Say you have excellent credit, you have 740 plus credit scores. Well, it says you can buy now, but it's something here that's not working because these numbers are grayed out. And I am pretty sure, I think it is that you would need to save a little bit more monthly to be able to come up with this number. So we increased the monthly savings to $500. And this is because this calculator is trying to see for a person or a family who's saving to buy with 20% down payment. That's why it's asking for a little bit more of savings to get to the 20% down payment of $400,000. For this person, they probably want to save $80,000, which is the 20% of $400,000, to be able to buy a house waiting, because they want to purchase a house with 20% down payment in this example. But guess what? It's going to take you 22 and a half years to save $80,000 at that rate. If you're only saving $500 a month, it would take you 22, almost 33 years to save 20% down payment. It is possible that you can buy that house now at 3% and with only $12,000 down payment, which you can save really quickly, and or you could probably qualify for a down payment assistance or some other things that can be done to cover the down payment and the closing costs. It says here, consider this. If you buy now after almost 23 years, you would have reached the $617,026 in home equity. So that means that if you buy now a house for $400,000 in 22 and a half years, your home equity would be $600,000 difference. That's how much the house is appreciated every year. Your house sitting there for 22 years is going to be appreciating every year and every year. And it's an asset that accumulates value. As long as you keep up with the house and you keep it in good shape, right? However, the rent payments build zero equity. When you pay rent for 20 years, when you leave that renter apartment, what do you take with you? Have your assets been building up? Maybe allow you to save a little bit more would be compared to the equity that your house is going to be leaving for you? Maybe not. If you buy now, you only need 3% down payment of $400,000. This house now is $400,000, but in 22 and a half years, this house would be $777,938. All right. So that's how much that house, that same type of house you're looking at right now, would be in 22 years if you wait that long. It's unfortunate that this doesn't give you a calculation on maybe 5 years from now or 2 or 1 year. This calculation right now is only in 20 years, which is the cost to wait to buy for 20% down. Your monthly payment snapshot, principal and interest. Buy now, your principal interest would be about $2,185. And if you wait, then your principal interest would be higher, obviously, because the house will cost higher, and who knows what the interest rate would be at that time. The taxes, homeowners insurance would be higher. They may or may not increase it every year, but they increase over the years. So taxes, homeowners insurance is something that it's going to be subject to be increasing. Mortgage insurance, yes, that's something you would have to pay if you were to buy with 3% down payment. And if you wait to buy with the 20% down payment, you would not have mortgage insurance. However, when you buy with 3% down payment, your mortgage insurance, you're paying for a few years. Here, they're calculating is probably 5.8 years mortgage insurance until the loan to value has reached 78%. It says, if you buy now, your mortgage insurance will fall off in about 5 years for this scenario. And if you wait for 22 years, then you're going to be having a house that's going to be more costly. Who knows what the interest rates would be, and your mortgage payments would be even higher. If buying now is the right financial decision for you, because it also would depend on your current personal and financial situation, you'll eliminate the unknown when it comes to interest rates, home prices, and housing availability. So if you buy now, you would have more certainty what to do with your assets rather than worrying throughout the years how the market is going to be until you're safe all that money for down payment. So this was the calculator that I wanted to show you. This is based on waiting to save for 20% down payment. But I hope this also gives you an idea of, like, if you wait just to see how the market is going to react, you could be risking that then the houses are higher and you just paying rent and you're missing on building equity on a property. If you have any questions, you can call me 617-797-7984. Thank you very much. Bye-bye.